Thank you, Sarah. And Wilf, welcome to a special closing bell on this holiday shortened trading day. I am Mike Santoli, in for Scott Wapner. This make or break hour before the long weekend begins with a tension release rally pushing the key indexes further into record territory. A better than feared jobs report and the imminent end to the suspense over the big budget bill have freed markets to extend their recent gains. Take a look. The S&P 500 up now almost 0.9%, so above 6275. The Dow also up a similar percentage. NASDAQ has retaken the lead from what had been a two-day rotation towards small caps, such as the Russell 2000, which remains up 0.9%. Treasury yields, they are higher as chances of a July rate cut have more than almost all but evaporated, let's say. You get the two-year yield is up the most, but you do see the 10s, 433 right now. It had been down by 4.2. We will discuss whether these suddenly ebullient markets have it right or are getting a bit too comfortable all this hour. Let's bring in Fundstrat Head of Research and Fundstrat Capital CIO Tom Lee, also a CNBC contributor, joins me here. Tom, good to see you.
Great to see you.
So we have this rally that's now extending probably beyond what most were positioned for, but it started in a moment of peak uncertainty.
Yes.
And even when we were in peak uncertainty, a lot of us were saying that's kind of usually forward-looking bullish. But are we now getting to a point where we have finally feasted on all of the uncertainty and now we have a lot of these blanks being filled in?
I don't. I think that it is appropriate that we are making new highs because the fundamental and the visibility is better now than it was in February at the old highs. And I think there's three levers that are going to get pulled. One we know is that the Fed didn't unleash liquidity at the April lows. So we have a Fed that's been on hold and tight. But if the information and the data comes in dovish, that's 12 to 24 months of Fed liquidity and dovishness. That hasn't happened yet. The second is that I think that there is a false argument. People are saying the multiples are stretched. The PE should be expanding because we've now had 5 stress tests that companies survived. They survived COVID, they survived the bullwhip effect, they survived the inflation surge, they survived the Fed fastest hikes, and now they survived Armageddon. If you don't have 5 more episodes, multiples will be higher 2 years from now. And the third is that I agree with anybody who says that, look, we've kind of reshaped some of the economic flows around tariffs, but that's an upside story because if it plays out better, that's an earnings surprise. So you have 3 levers that tell us that 6,200 is the market beginning to recognize we're in a better position while $7 trillion cash is on the sidelines. And I can tell you, our clients, institutional clients, remain very skeptical. This is the most hated V-shaped rally.
I grant that given the strength of the rally, investor sentiment pretty much across the board has lagged. It's not as bullish as you would normally expect. The $7 trillion in money market funds, though, I mean, to me, it's a non sequitur. It always goes up. Unless you're at the end of an awful bear market, the money doesn't come out of money market funds. And then right now, as a percentage of total market cap, the S&P is like $60 trillion, or the U.S. market is. But it's like, what are we talking about?
Well, there's a couple things to keep in mind. One, in fact, money market balances have declined. They only started to rise really in 2022.
Right, they had a stutter step and then they went up.
If you look at margin debt, NYSE margin debt, the dollar amount absolute is still below where it was in October 2021. So you have like 4 years, it's 4 years and you're still not even higher in margin debt. And third, it really doesn't take, you don't need 60 trillion to come into the stock market to have it rise 10%. You probably need 200 billion. And I think there's a lot of high net worth money. I know there's a lot of our institutional long short macro that is shorting this rally. The long only managers are defensively positioned. They don't believe in a cyclical long. But look, if rates come down and the Fed starts easing, it's going to force people into a cyclical tilt.
In terms of the jobs number today and how it bears on all of those factors, whether it's timing of the Fed, whether it's, you know, the underlying resilience of the private sector, which maybe is still kind of in watch and see mode, how does that bear out?
Well, today would have been a day where if it was weak, then the Fed has to change its calculus, but the job market's good. So now the waiting game is, how much will inflation surge over the summer? Inflation expectations are actually coming down. So now all that we're waiting for is let it get through this CPI hump. I do think it means that once you get into September, we should really think about cuts coming. And that's what I would focus on more as an investor, that, well, that's a cutting cycle. The Fed won't just do one cut. They're going to continue cutting. ECB and the U.S., 200 basis point different in monetary policy rates. But if you take CPI year over year, ex housing, which is how Europe calculates it, we're both at 1.9% today.
Yeah, we'll see if that does persist. Hey, if everyone's going to celebrate Fed going in September and December, guess what? That's what the dot plot said pretty much. So it's not as if they're two off sides, as many have made it out to be. Let's bring in Truist's Keith Lerner and Wealth Enhancement Group's Aya Yoshioka. Good to see you both. Keith, how are you kind of postured at this point market-wise? Because I know you've kind of gotten tactical around the lows. Now that we're extending to the upside, maybe in melt-up mode, how does it look?
Yeah, well, great to be with you, Mike and company. So, listen, I think this market has earned the benefit of the doubt as far as the uptrend. Yes, we have moved a lot off the lows, but the big picture, which we've talked about before, Mike, is this market's moved sideways for about 7 months. If you take out the kind of that one overshoot, which was an extreme, and then the technology sector has really been moving sideways since last July. As you look from more of a technical perspective, you're in gear right now. It's hard to be bearish when you have tech making a new high, industrials making a new high, financials making a new high. Now you're seeing this bit of a catch-up trade as well. The earning trends are positive as well. I think, listen, the biggest risk, which, there's some of the discussion, expectations have moved up as well, right? Valuations, we can argue about that a bit, have moved up. And we're seeing sentiment normalize, not extreme as well. So, listen, Mike, I think we're still in a positive seasonal period as well. So I think the underlying trend is one of positive, and you have some of those catalysts like getting some clarity on the tax bill, getting some clarity as far as around interest rates, deregulation. So it's almost like some of those things we were looking for at late last year are actually coming into vogue now. So that's a positive. Are we going to have some hiccups later this year in August and September? Probably. But for now, again, we would stick with that underlying uptrend.
I'm curious as to what your conversations are like with your clients. We're talking here about, whether investors are kind of psychologically bought into this new healthy-looking market or if they're resisting it.
Yeah, well, what we
Sure.
saw.
Hi, Mike. Thanks for having me. So, in terms of, what conversations we're having with clients, they're definitely a little skittish, just not being prepared for this uptrend in the markets, especially after all the news headlines that sort of whipsawed markets. But they're a little bit more comfortable with where the market has been now. I think that's why we're sort of cautioning perhaps the ride could get a little bit tougher during the summer. But I think, in the long term, we want to make sure the clients are just focused into the long-term nature of investing.
And within the markets, I mean, aside from just getting folks allocations where they perhaps ought to be in line with their goals, where within the markets seem like they're either underappreciated or maybe a little bit crowded or hazardous?
Sure. I mean, I think, everybody's talked about tech in terms of just the leadership. It's been the workhorse for this market for so long. And we continue to think that that's going to be the case. But, we have to be cognizant about valuations and where they at. But, the quality of these companies is very, very high. And so they deserve sort of premium multiples. It's just that, at some point, they're going to fluctuate up and down just with some of the noise. And then I think, financials are a place that we all want to be exposed to, just from a cyclical standpoint. As rates come down, currently banks are enjoying high interest rates, but as those rates come down, I think it's going to be very helpful from a cyclical perspective for loans and things like that. So we really like financials as well.
Tom, what's the message you're pulling from we're talking about new highs in industrials. Consumer cyclicals have kind of hung in there, right? So the stock market is not as if it hasn't really been leaning in the direction of we're headed for weakness in the economy.
Yes.
So what growth do you feel as if is now kind of baked into the market?
That's a great question, because you're right. I'd rather see industrials flat on their backs because the ISM's been below 50 for now 29 months. It's the longest stretch of being below 50 in its history of the survey. So I think there is pent-up spending, but the stocks have moved.
Yeah.
Consumer confidence is flat on its back. Now, in 2009, it was flat on its back, and we did a study back at JP Morgan that showed the best time to own consumer cyclicals is when consumer confidence is negative. So I'd say there's less upside for both industrials and consumer cyclicals, probably more for financials and small caps. But there is this relief from businesses as we move back above 50. And I think getting this bill passed and getting the tariff behind us will push the ISM back up. And it should lead to earnings growth.
Now, I mean, the case for small caps, I mean, I feel like we kind of keep going through this anticipation cycle of when things might line up for it. You know, they've moved again. Russell 2000 hasn't been above this level except for a brief period in the fourth quarter, and then you go back to like late 2021. So what pushes it over the line?
Well, I won't blame any investor who says, fool me once, fool me twice, fool me 3 times, like I'm not P.T. Barnum or whatever. But I do think it really depends on the Fed being committed to continuing its easing cycle. That's the setup we had before. And you know, I don't blame investors for being really reluctant. But the good news is since the April lows, small caps have been outperforming and have the banks. That's kind of the participation you want to see.
Sure. Keith, you know, I feel like it's interesting that we're all kind of in agreement here that there's still this reserve, you know, of a little bit of skepticism among most kind of tried and true investors and professionals out there. And yet I see some of these post IPO moves, and you see what's happening in Robinhood and parts of crypto, and you see the daily options trading volumes. And it seems like there's a group in this market that's really pretty aggressive and highly active. So how do you reconcile those things?
Yeah, Mike, well, I think that probably suggests at some point we will have some gut checks because sentiment, which was extremely supportive at the lows, I would say is neutral to maybe a slight negative as a whole. But, you know, also going back to like this move off the lows, 20%, we know looking at the data, we've seen 2-month moves of 20% about 10 times since the 1950s. And a year later, you've been up every time. That's a small sample. Things could be different this time, of course. But, you know, again, I mean, the big picture is there's a kind of this mix of skepticism and then this kind of really greed factor. You see the high beta stuff outperforming as well. So again, maybe that leads to somewhat of a gut check, but sentiment more broadly to us isn't a big hindrance, overall for this market, and the flow data is mixed. So again, I would put a little bit more weight on the underlying trend. But again, I also don't want to be complacent saying we're not going to see any hiccups. It's going to be just a smooth ride forward when everyone is feeling, pretty good ahead of the 4th of July here.
Yeah, absolutely. And finally, I mean, the bond market is it seemed pretty agitated for a little while. People got a little maybe oversensitive to, let's say, the 30-year going up about 5%. We're talking about still wide deficits for a few years, most likely. How does the bond market's action speak to you? And what do you, again, tell clients about the role for fixed income here?
Sure, Mike. I think in the bond market, it's tough, right? I think bonds have always been this ballast and hedge against equities, and they're not as much of a hedge, especially in a stagflationary environment. But with that said, the Bloomberg Ag Index was up 4% year to date in the first half, and it's been the best first half since 2020. So I think bonds are still doing a good job, and they're providing income, especially to the retirees that are many of our clients.
All right. I guess playing the role that maybe they were assigned for a while here. Tom, Keith, and I thank you very much. Appreciate it. And, of course, happy 4th. All right, we are tracking some big moves in the chip space. Christina Partsinevelos, all over that for us. Hey, Christina.
Hi, Mike. Well, the Trump administration just reversed a 6-week-old export restriction on chip design software to China, sending Cadence and Synopsys shares up at least 4% right now. This is really just a classic President Trump negotiation tactics. He imposed the restrictions back in May as leverage when China cut off rare earth exports in early April. Now that China's potentially agreed to resume rare earth permits, President Trump is lifting that software ban. So the playbook is relatively clear. Use tech restrictions as bargaining chips, but not necessarily permanent policy. Mizuho says in a note today, this restores at least 10 to 12% of revenues for both Cadence as well as Synopsys that was at risk. The big question is what's next? NVIDIA, AMD's AI chips restrictions still remain in place for now, with NVIDIA's CEO very vocal in his stance against them. He's called them a failure before. But the hope is that these AI controls could get similar treatment. Mike?
All right, Christina.
What we've seen so far is that tariffs haven't hurt. The dog that didn't bark was that tariffs going to hurt the economy, we're going to hurt the markets. Market had the fastest recovery ever, from the low in April, from a 15% decline, and we're at new highs in the market.
That was Treasury Secretary Scott Bessent last hour talking the market recovery. This as the S&P 500 and NASDAQ again head for closing highs today. Here to share her playbook with stocks at records, Morgan Stanley Wealth Management CIO Lisa Shao. Lisa, appreciate you coming on to weigh in here. I mean, it's certainly true, as the Treasury Secretary says, we've had this very rapid and complete recovery from that tariff scare. Does it tell you that the economy has sidestepped whatever impact we thought we were going to get from tariffs?
No, I don't think we know that yet. I think, most folks recognize that some of the tariff policy resolution is still yet in front of us. We don't have deals from the vast majority of countries. We know that the July 9th deadline is approaching, and it's very likely that we're going to continue to kick the can down the road for a while to see what we can negotiate. But I think it remains to be seen, which is one of the reasons that the Fed has been on hold. But the market, I do think, has moved on. And is assuming that whatever impacts we get from tariffs are going to be quote unquote digestible. And so I think that the market narrative is now really focused on, the next 6 to 12 months where, there are great hopes that we are going to get some stimulus, particularly on the, corporate tax side of things from this tax bill. That will help earnings over the next 6 to 12 months, that will stimulate capital spending and productivity. So I think that's where the market's brain is at the minute.
Sure. And do you take issue with it? I guess the question at any moment is, has a gap opened up between the market story that it's locked into and what you think the likely outcomes are?
I think in the very short term, this is a market that wants to go up. I mean, you just look at the behavior of the tape, you look at the momentum in the market, you look at the leadership of the market. It's the same old Mag 7 tech-oriented leadership, and positioning remains, only average. We're not really overbought yet on technical factors like sentiment and positioning. So we think that this is a market that's going to continue to grind higher, throughout the next, 6-8 weeks towards 6,500, which is our full year price target. I think once we get past, the debt ceiling and past the actual tax bill, I think it may be a sell the news event. Where folks start realizing that an awful lot of good news now has been discounted, in this move. And that what we're going to be struggling for as we get into 2026 is where the upside surprise is going to come from, because that's really what powers markets.
Sure. And where would you recommend folks start looking? What do you do with this market that seems like it seems destined for your target, which is only 3.5% up from here, and yet maybe that's all it's going to get?
Yeah. So we've been emphasizing a move away from the pure passive index towards stock picking. And in that regard, we continue to find really good stories and opportunities in the financials where we're thinking about both the positive implications of deregulation, the improvements in animal spirits and the capital markets oriented businesses, and the potential for artificial intelligence and Gen AI productivity improvements. We really like the energy sector here, also likely to be a beneficiary of deregulation, as well as the energy infrastructure upgrades that we're going to see around the country around data centers. That's been a clear story. We like industrials and part of the CapEx rebound and reshoring narratives. And last but not least, we'd be looking in healthcare. Healthcare has been a sector that is chronically underperformed. Lots of worry clearly about some pockets of healthcare linked to some of these Medicaid cuts in the tax bill. But we like the biotech, some of the product folks, some of the distributors in healthcare that we think are pretty fairly valued. So we're looking for some value, we're looking for quality, we're looking for that cyclical exposure. And we think that that's where you can beat, if you will, that 3.5% gains that we see in the index.
All right. Yeah, healthcare certainly would be kind of against the grain. Maybe people looking past that one right now. Lisa, thank you very much. It's good to talk to you.
Absolutely. Happy holiday.
You too as well. 16 minutes until the early pre-holiday closing bell. That's right, at 1 p.m. Eastern time. Let's get back to Christina. She has the key stocks to watch until then.
Holidays soon. CoreWeave, let's talk about that. Just scored a major win, becoming the first company to get Dell's new server system running NVIDIA's latest Blackwell AI chips. It's a big deal because it shows how CoreWeave is becoming a key player in the cloud space, essentially renting out super powerful computing to companies like OpenAI that need it to train their AI models. Dell's also riding the AI wave with clients like Elon Musk's xAI, and that's why you're seeing CoreWeave stock up over about 5% and Dell up almost 2%. Switching gears, Datadog is replacing Juniper Networks on the S&P 500 index starting July 9th, following Juniper's acquisition by Hewlett-Packard Enterprise, HPE. Datadog is a cloud monitoring firm, and its stock is soaring almost 15% right now. Investors typically, and the reason for that is because investors typically buy shares ahead of index inclusion to front-run ETF managers who have to purchase these stocks because they're tracking the index. Robinhood shares, though, down about, last I checked, 4% after the announcement, as the trading platform had been widely predicted to actually be included in the S&P 500 instead. As we can see, that wasn't the case today. Mike?
Yeah, this is at least the second time, I guess, Robinhood got one of those head fake moves
the cold
ahead
shoulder,
of an index rebalancing. All right, Christina, thank you. We are now in the closing bell market zone. Pippa Stevens on why solar stocks are rallying again today. Diana Olick on the moves in the home builders, and Contessa Brewer on the activist stake pushing shares of TripAdvisor higher. Plus 314's Warren Pies on what he's watching heading into the close and beyond. Pippa, another relief trade in the solar stocks.
That's right, Mike. So solar stocks are tracking for their best week since 2023 after punitive measures were struck from the One Big Beautiful Bill. Sunrun is the top performer this week, surging 40% as residential leases will once again qualify for tax credits, with SolarEdge jumping more than 30%. Shoals, First Solar Array, and Nextracker all up double digits. But two important things to note here. The first is that there is very high short interest in these stocks, meaning some of the gains are likely short covering. The second is this bill is better than feared for clean energy, but it's certainly not good. While the timeline to qualify for credits has been extended slightly and the proposed excise tax on projects with foreign components was removed, the bottom line is that incentives for renewable energy are being gutted at an accelerated rate. Mike?
It's remarkable, Pippa. Looking at the TAN ETF is due to close at its highest level since November 6th, the day after the election. It round tripped down and back, although, as you suggest, it's still half its peak levels from 2 years ago. So quite a ride. Thank you very much, Pippa. And
Roller coaster.
Have a good holiday. Yeah. All right, Diana, home builders, I guess, with a lot at stake when it comes to rates in the Fed.
Absolutely. Homebuilder stocks are taking a hit today because mortgage rates moved higher after that hotter than expected jobs report. Now, the average rate on the 30-year fixed rose again today to 6.75%, according to Mortgage News Daily. That after moving higher yesterday as well. Rates had been falling little by little since the start of June, which had given the builders a boost. Still, we are in this very narrow, high 6% range really since mid-April. Today, the home building ETF is down a little under 2%. Earlier this week, it had been at its highest level since mid-March. But names like D.R. Horton, Lennar, and KB Home are down even more. They had also seen nice bumps higher in the past week, but pulling back today. Overall, the builders are struggling not just because of this higher rate stagnation, but because of the broader uncertainty among consumers about the state of the economy. Lots of people out looking for homes, just not inking the deals. Mike?
Yeah, quite a mismatch, I guess. Been there for a while. Diana, thank you very much. Contessa, TripAdvisor, long-term kind of laggard in the travel space. It's attracted some interest here.
Yeah, TripAdvisor shares are making massive moves higher today after Starboard Value revealed a stake of more than 9% in the travel services company. Look at that, up 16.5% right now. Shares had just been punished last year and mostly flat year to date because of worries about consumer discretionary spending and whether AI might make search platforms like TripAdvisor just irrelevant. I was unable to reach Starboard or TripAdvisor to talk about how their stake might influence TripAdvisor's prospects, but I will point out TripAdvisor, Expedia, And the giant in the space, Booking Holdings, are all talking about how they're incorporating AI and expect it to give them a lift rather than to provide simple competition, Mike.
Yeah, you would think one of the first potential big use cases that's getting tested out there. Contessa, thank you very much.
Yes.
Warren, good to have you on. You know, we hear you've been giving the market the benefit of the doubt for some time. It's been the right way to approach it right here. How does the thing set up right now in terms of what the market has already been feeding off of, and where do you think it goes from here?
Yeah, I mean, we're still overweight equities. That's been our posture since early May. We stepped out and we neutralized our overweight back in February and kind of got back in early May. And that's, I think you want to let that run. I mean, July seasonality, just to keep early simple, is so positive. I mean, I think a lot of people know this, but one of the things that we looked at is sort of counterintuitively, when you have this strong May and June, it feels like maybe July shouldn't be that positive. But in fact, when you have a greater than 5% gain in May and June, leading into July, July's even better. And so that first half of July, when you break the year up into 24 different two components for each month, this is probably one of the strongest little 2-week periods for the market. And so want to stay long, at least for right now, overweight equities.
I hear the seasonal tailwind story. I certainly hear the investors are maybe still underpositioned, or they haven't participated fully and might have to be net buyers or would be slow to sell if we did keep going up. But all of that kind of boils down to somebody else out there is going to buy it for me at this valuation. What is the underlying kind of fundamental, the earnings trajectory and the other things say about where we should be?
Yeah, I think that the rate of the rally is probably going to slow as we get through this July period. I think that one of the reasons why July is seasonally so strong is because you do have a lot of new money coming in, rebalancing flows and other flows. I still think there's some room to squeeze out of that systematic bid that we talked so much about over these months that got forced to de-risk during the vol event in April, and they're getting back in. And then the other big driver of the market's going to be earnings. Like you suggest, I think earnings estimates have come down probably more than is necessary due to the tariff fear. And so I think that's created a lower bar for these companies to jump over as we go through the second half of the year. And the other big factor we see with the big, beautiful bill is that we're going to still be running these 6 to 7% deficits probably out for the next few years. And I mean, that's pure money creation into the economy. That's 6 to 7% money creation, unfunded money creation into the economy. And I think that's been really the backbone of the economy and the backbone of the market. And it's why we haven't had a lot of credit creation, see home builders and housing markets struggling, but still you have this one big factor, fiscal stimulus that's working.
Yeah, there's no doubt there's no fiscal payback on offer in this bill, no matter what else you think about it. You know, all that being said, and, you know, we don't have too much time, but I just wonder if this market has been kind of raring for a real completion of an AI bubble of some kind.
Yeah, I mean, we think AI adoption is going to be a big driver for the next big part of this bull market. How that materializes, I don't know. But the census runs a biweekly survey now, and you can see it in the data. Like the firms planning to use AI and actually using AI, that's a hockey stick. One of the things we look at is token generation. That's basically the amount of words that these LLM models are generating. And we think that token generation is going to go from 50 trillion to 200 trillion by next year. And if you put that in context, that's more than twice the amount of words spoken in the entire planet on any given day. So the AI story is going to take hold of this market.
Yeah, market is certainly attempting to sniff out the implications. Warren, thank you very much. As we head into the close, the S&P up about 0.8%, solidly in new record territory. The Dow's up by 330 points. Small caps have outperformed, as have the NASDAQ. Fireworks here on Wall Street. That does it for closing bell.
Hello, welcome to Blue Cloud Trading. This is the segment of the video where we will cover the stocks that were discussed on closing bell today. Tom Lee, Fundstrat was on along with some other guests there, and they went over a number of stocks. Actually, there was a lot of ETFs in there too, like the small caps. So we can see that list right here on the left-hand side. I'm gonna cover those specific stocks and ETFs. I'm also going to cover the indices in this video. Some of the Mag 7 stocks, as well as the GRNY ETF, one of our members' requests, all in this video. My name is George. This is Blue Cloud Trading. Let's get started first and take a look at the markets. How did they perform? Like I said, it was a short day. Market closed at 1 p.m. today. So here's the Dow up 0.77% for the day. You've got the NASDAQ up 1.02%, S&P 500 up 0.83%, and the Russell 2000 was up 0.92%. And here's the heat map, a lot of green here. There were a few red stocks in the red, like Merck, for example, was down 1.77%. Bristol Myers down 1.49%. But if you look at the big names here in technology, like Microsoft, Oracle was up 3.19%. Amazon, Apple, Nvidia, Broadcom, Google, Meta, they were all up today. Tesla was down 0.10%. A lot of the financial stocks did well. And if we look at the sectors for the day, and for the one-day performance, technology was the number one group, right? Then there was financials and utilities. And energy was down 0.01. It was the only one that was actually negative today out of the sectors. If we look at the one-week performance, everything was up. Okay, all sectors. Basic materials were at the top of the list, and then industrials and technology. And look at the 1 month performance. Technology is up 8.96%, and if you look at the 3 month performance, it's up 22.87%. So, yeah, energy down 4.58% for the last 3 months, though. So let's take a look at the stocks. And remember, if you guys want to support this channel, don't forget to hit that like and subscribe button. And if you want to get access to the member-only videos that I post, where I go over my entire portfolio, consider becoming a member. You can do that very easily by clicking on the subscribe plus button. After you subscribe, this little plus sign will pop up. You can click on it, and that will bring up this little pop-up, and you can become a supporter, where you can request a stock to be analyzed in the show. Blue Cloud Trader, this is where you get access to those member-only videos. And then Blue Cloud Legend level, you get the access to the member-only videos, some day trading videos, as well as daily trade updates on the stocks that I trade. And once you become a member, there'll be a new tab that pops up next to posts. It will look like this. It would be called Membership tab. And you click on that. That's where you'll see the daily posts as a Blue Cloud Legend level member. That's the key thing. You have to become the top tier here. All right, so let's get into these. We'll start off with a SPY. And as you can see, I mean, it's in a very strong uptrend right now. We broke through that 613.23 level. That happened right here on Friday last week, June 27th. And since then, it's been moving up steadily. We're experiencing all-time highs for the SPY, looking very strong. Here's a QQQ ETF on the daily chart. Same thing, okay? Very strong uptrend, up 0.98% today. The Dow Jones, now that has not taken out the highs of 451.34, but it's getting really close. So we're about, 0.7% away. And it's following in the tracks of the other indices, but we do need to break that level first for confirmation. If it comes to that level, many times price may stall when it reaches that a prior level of resistance, okay? And that level goes all the way back to 2024, December 4th of 2024. What about the Russell? Russell's also doing pretty well here. You can see that once we broke through that very extended, consolidation area over here, we finally got through that 200-day moving average. That's the dotted yellow line that you see right there. We got above that, and you can see prices now steadily moving up. Now, the Russell 2000, we have to go back here. Its all-time highs is around 244.98. That goes all the way back to 2024, November of 2024. So how far are we from that level? We're about 8.9%. So I can certainly see price continue moving up here. We may see a little bit of stalling take place right around this level here. You can see there's a little bit of consolidation in that area around 230. Let's get the exact dollar amount of that high right there. It's 230.70. So let's put that in there. And we'll keep an eye on that one. And it's a daily resistance level. So Russell's looking good. How about the VIX? The VIX dropped down 1.56% today. That's very positive for the markets. We want to see the volatility coming out. FEZ, though, the Euro stocks, down 0.18%. And but it's still it's just kind of like hovering right there above the two moving averages. We had that recent negative crossover with a faster moving average, the green line, the 9 period, crossed under the 26 period. We're using the Ichimoku indicator, by the way. That's what the cloud is right there, the Ichimoku cloud. And essentially, you want to be looking for stocks that are in ETFs where price is above the moving averages, above the Ichimoku cloud itself. And there's one more element, and that is the Chigu span, which is the white line. See that white line in the background there? Now that, okay, it's projected 26 periods into the past. It takes today's closing price right there, goes back in time, 26, that's where you'll find it. And when that white line is above the candle 26 periods ago, as it is right there, that's very bullish. In the past, when it was under, okay, you can see when it crossed under, it also leads typically to a downfall in the stocks. So right now, this is all bullish. Let's take a look at those 17 stocks. Yeah, there's 17 stocks and ETFs in here. We'll start off with Bitcoin. And these, by the way, the ones that are on the very, very top are the ones that I've got flagged with blue colors. Those are the strongest, okay? They've got the best technicals on both time frames, the weekly and the daily time frame. All right, so let's start off with IBIT and we'll look at the weekly. There it is, above the cloud, above the moving averages, breaking through that 61.75 level. It's actually a daily level. That goes back to that date right there. I think we probably need to add one more level of resistance now. It's based on that prior high right there for all-time highs. It's 63.70. So that is really an area that is important to keep an eye on. On the plus side, it did break through that. See that long extended little diagonal trend line? That was broken yesterday on Wednesday, and we're staying above it. But it was down 0.37%. CrowdStrike up 3.63% today. Very strong uptrend. It's actually one of the stocks that's in my portfolio. I added this one back on May 22nd. It's moved up quite a bit here. From when it broke above that 10 in there, it's up 17.4%. One of over 30 stocks that are in the portfolio. So that's a good reason why you may want to consider becoming a member. You can follow along with the stocks that are in there because I don't cover the stocks that are in my portfolio here typically. All right, just once in a while I'll add one in there just to showcase it. CCEP is Coca-Cola Europe Pacific Partners. Now this one up 3.14% today. What you see here is broke through this level. It's experiencing all-time highs. All right, never been at these levels before, so it's looking good on the daily and on the weekly, of course. DDOG, which is Datadog Inc., technology sector. This also today broke through the Ichimoku cloud. This week it broke through the cloud. Today alone, it was up 14.92%. Look at the daily chart. There it is. So it gave us, some buy signals right around this area here when it broke through that 200-day moving average. It's a shame that I missed that trade. I would have loved to have gotten in there. Why? Because that stock, since that breakout, has moved up 24.08% since June 17th. Okay? It's not like it's been that many days. It's a couple weeks now. So interesting that it's taken off. I like it. And if we look here, yeah, it broke through that prior high right there too and closed above it. So my expectation at this point is that the next level of resistance is going to be up at these levels here. The high is let's see, $170.80. I'm sorry, $170.08 is the price that it needs to reach. Let me go back in time a little bit more and see the monthly chart. So we do have other highs up here too on the monthly. Let's throw that trend line up here. And the high there is 199.68. Right down to the penny. Very important. I color the monthly charts. I do color them purple. A little bit easier to recognize as far as the time frame. The light red is daily, and the blue is usually a weekly level of support or resistance. And so how far are we now from this 170.08 level? We are approximately 8.62%. So I can see that price reaching that level. And then if it breaks through there, then expect it to go back up to 199.68 from there. All right, CDNS. Let's look at the daily chart here. Now this one is also, check this out here. Let's look at the weekly chart because that's a weekly level. the 328.99. It goes back to this date, which is 328.9. I'm sorry, June 21st, 2024. Okay, we can see that it came to that level there, close to that level back on March 22nd. That's the highest level. When you look at the high here, the high right there, there and there, came close to the right there and dropped. And right now we're struggling. We did not break through that. You can see the price here is 326.84, not 328. It's not above that 328 level. So that's what I'd be waiting for. I want to get confirmation that this thing is real. It's going to take off. It was up 5.10%. So, you know, what's to wait another day to get that confirmation? Because look, you got yourself a spinning top here. This is a reversal candle. I've talked about that one, that particular candle, many times here on the channel. And this is what it looks like. Now, if you get one of these, okay, at the top of a move up, that's bearish. If you get the spinning top, however, after it's dropped at the bottom of the move, that's very bullish. All right, so that's something to keep in mind. Like over here, you can see that there's a spinning top that led to a nice move up. They don't, you know, you can't really guarantee that what's going to happen here, but this is a reversal candle. There's a higher probability that's going to probably pull back. I would just wait to see if it can clear that 328.99. Here's something interesting that happened today. The wind and solar stocks were up. Okay, because they're going to probably they're going to benefit if that bill passes. Now, it's unknown right now. As of just a few minutes ago, I was like, you know, listening to the news. There's a good chance that it's not going to pass. All right, so I'm talking about the big beautiful bill that Donald Trump is trying to pass. So there's some Elon Musk has gotten his hands into this, and he is supporting any senators and, you know, representatives that are basically against it, and he's going to go. Basically, he's going to support those people, and he's going to, when it comes time for elections in the future, he's going to basically target in a negative way the ones that are for the bill. So it's getting interesting, the political arena. And so anyway, the wind stocks were up nonetheless. I'm not sure. Like, again, if the bill doesn't pass, the solar and the wind stocks will probably drop. Okay, so watch that next week. But right now, what's happening? As you can see here on the weekly chart, we're above the 200. We've been in a strong uptrend here for a bit on the FAN ETF, right? Here's the daily chart also, and doing pretty well. Okay, SNPS, Synopsys, is another stock that was brought up on the show. Now this one here is interesting because you can see there's a trend line that I drew, and let's take a look at that. How did I put this thing together? Well, you can see the high right there. All right, let me zoom in a bit. Right there. Whoops. So there's the high right there. It touched that level right there, and that's all you need is two tops, right, to draw that diagonal trend line. If you look at where it stalled today, right on that trend line, and a spinning top, a reversal pattern. So after gapping up, it was unable to successfully close above that diagonal trend line. So yes, it broke through these highs here, and that's very bullish, but that's one more thing I'd be waiting to see if it can clear that level. Here's the weekly chart. Okay, so you can see it even more clearly right there, and it just barely broke through the cloud here. The cloud itself is still bearish. So remember, the Ichimoku cloud consists of the Senkou span A and the Senkou span B. When you get the Senkou span A, the lighter colored blue line under the purple line, that's not a bullish sign right there. It's bearish actually. All right, over here you can see where it was above. It was very bullish. The price was moving up. Over here we've got ourselves still lower highs, right? Although I will say this, if you look closely from this low, you do have a higher low right there, and we did break out above that high. So price moved up, it moved down. So there's the high that it was able to take out. Okay, so now we're above that high. So we technically do have a higher high and higher low right here that's just developed in Synopsys on the weekly chart. And it broke through the cloud, but we don't have all the elements. And so you have to be cautious here, in my opinion. I wouldn't jump in yet. IJJ is the mid-cap 400 ETF. And on the weekly chart, just broke this week above the Ichimoku cloud. Very bullish. Looks to me like the Senko Span A is just about to cross above the purple line. So that's going to be very bullish. The Chiku Span, the white line, has closed above the candle 26 periods ago. You can see that right there. So all the elements, and we have a faster moving average above the slower moving average. All these things are really bullish. You can see that when IJJ came close to the 200-day moving average down here, it stayed right above it. Well, it closed under for 1 week, and then it popped right back above and has moved up now. So mid caps look pretty strong. Industrials, XLI, on the weekly chart, you can see that it broke through these levels here. Going back, this is a daily level actually, broke up through that 145.56, so it's off to the races here. The directional movement index is very bullish. You've got the ADX, the white line right there, that's moving up right now, so that's good. It's telling us the momentum is increasing. You get the green line, the positive DI9 is above the negative DI9. That's also bullish. So this is the beginning stages, I think, of a run up. So we'll see if I'm correct on that one. Financials, same situation. XLF, okay, so that broke through that 52.63, very important. Same situation. The ADX hasn't started moving up yet, but overall on the weekly it looks good. And here's the daily chart for you. On the daily it is up, okay, and here's the industrials on the daily. All right, very, very strong. Healthcare, on the other hand, XLV on the daily is inside the Ichimoku cloud. Kind of depressed here. It has not taken out this high. Maybe if it does and gets through that cloud, then it's got that 200-day to moving average to contend with again, but it will show some more strength at that point. Right now, I would not be jumping into that one. Berkshire Hathaway in a decline now for a bit, right? Since this date right here, whoops, May 2nd, since May 2nd, Berkshire has dropped 10.17%. So it's still dropping. Yesterday closed under the 200, and then today it got right back above it. It actually formed a bullish pattern here, double pattern. It's called the bullish harami. Those two candles right there. It's when you have a large red candle followed by a small bullish candle. And it looks exactly like this, okay? But harami in Japanese stands for pregnant. So imagine the big body, and then there's the little body. Now, let me show you guys that on the cheat sheet. It is right here, bullish harami. Large red candle, small green candle, and it's a double candle pattern that's bullish. After a drop, you see something like that, it might turn into something. Would I be adding a position here in Berkshire based on that? No. Maybe if it was going to do a day trade, next week, possibly. But on the weekly chart, you can see we are not looking so good. For multiple weeks now, we've been dropping, and then we're still under the moving averages. And it's just not, you want both time frames to be on the same page, weekly and daily, and we don't have that with Berkshire. AMD is under the Ichimoku cloud, so that's bearish. I would hold off on AMD, Advanced Micro Devices. Yes, it has moved up. If you look at the daily, it looks pretty bullish. But that weekly is right at that level of resistance. I would not be touching that one. Dell is inside the cloud, so that's a good sign that it's breaking into the cloud. It was, it was rejected last week on Friday of June 27th, and this week it's inside. But I'd wait some more, a little bit. You want to wait for confirmation. The cloud is still bearish too, and on the daily chart, it does look more bullish though. INTC on the daily looks good. Although this is always a bad sign when you see that the momentum, see how it was moving up steadily like that, and then you get that sharp drop on the white line there. That tells me that the momentum is over here for this move. So it's likely. I mean, it's pulled back. It's found some support here. I'd wait to see. Now, I also wouldn't be jumping into this particular stock. I mean, the profit margins are negative 36.19. Sales growth rate is negative 8.39%. So I would not be touching that one. Here's a weekly chart under the cloud. Okay. Yes, we've been finding that level of support at 1851, but it's stuck. Basically, consolidating right now still. Okay. What about TAN? What's TAN? TAN is the solar ETF. This is showing a lot of strength today. Again, based on the fact that they might benefit from the great big, the big beautiful bill situation. But again, that's only if it passes. And if it does pass, expect this to continue to move up. Now you can see that ascending triangle pattern. That's a bullish pattern right there, and it broke into the cloud for the first time. I mean, we're talking about since, what is this? This is the last time it was inside the cloud was over here. It was back in 2023, folks. So the TAN ETF back here, when it got into the cloud, dropped about 63% in 2 years. Now all of a sudden, some strength coming in. Now all of a sudden, you can see on the weekly chart, the green line is above the red line. Look at that. Look how long it was in the red zone. Okay? You see all that? And so, I mean, if you go back to the highs back here, this is the all-time highs for the TAN. At one point, we were at a level of about $127 per share or so, somewhere in that vicinity, or 126. And now we're at $38 per share, as you can see there. So, but it's been beaten down so much, and any positive news is going to be beneficial for TAN. And here's a daily chart on TAN. You can see that it was finding resistance at the 200 twice and dropped, right? Dropped. This time, okay, it took out, it closed above the 200. It broke above this high, broke above that high too, okay? And now it's off to the races, I think, on the daily. So if you want to be early in on something, certainly you can trade it on the daily, maybe switch, also use a 2 hour if you want to, just to be a little bit more, but you have to be more, it's more active trading for those of you who are, have the time to be trading more actively. But look at that daily time frame. Oof. Anyway, that decline from the past. Okay. IJT, the small cap ETF, is doing pretty good. Here's a weekly chart. We get a positive crossover. Price got above the 200 and has been moving up. It entered the cloud right now, so a lot of bullish things happening. The positive DI is above negative DI. The Senkou Span A is moving up, and at some point, maybe in the next couple of weeks, maybe 1 or 2 more weeks, the small caps, if they can continue in this trend, will break through the cloud. And Tom Lee will be very happy because he's been wanting this to happen for a very, very long time. But we're not there yet on the weekly. On the daily, however, it's been looking very strong. In fact, if you look closely at this, it's a inverse head and shoulders pattern. Let me show you guys what that looks like. It's an interesting pattern, which is very bullish. All right, so I talked about it yesterday also. Here it is, the inverse head and shoulders pattern. Okay, drops, comes back to a specific level here and drops, taking out the prior low. Comes back to that same level and drops, okay, creating the second shoulder. So this is the head. Here's the first shoulder, head, and second shoulder, but it's inverse, so it's upside down. And then if it can break through this level, this prior level, then that's very bullish, and you can expect it to continue moving up. And of course, the inverse of that is the traditional head and shoulders, which is bearish. What we're looking at is the bullish version. And here, the head would be right here. Whoops. Hold on. This would be the head right there. Here's the shoulder. Here's another shoulder. It doesn't have to be exactly perfect. It doesn't have to be at the same level. But one thing that you want to look for is the, that it breaks through. In this case, I would probably be looking at this part right here, obviously, because you can see that it came to that level, dropped, and now we're breaking through it. You can see there was some support here in the past, all right? And so now we're above it. And we're also above that 200-day moving average for like a couple of days now, 2-3 days. So that's the daily. Let's look at the weekly. And yeah, the weekly is starting to look more and more bullish, but we're not there yet either with this one. Okay. So that's all the stocks that they talked about, the majority of them, not all of them. And then now we're going to look at the Mag 7, some of the stocks that are not in my portfolio. The ones that are in my portfolio I share with members, like I mentioned. So here's Google which is looking stronger and stronger every day. You can see that for multiple weeks now, it's been moving up. It got above and closed. And that's a really important thing. On the weekly chart, it closed above the cloud. The only problem is you get the faster moving average still under the slower one. So that's not good. If you look over here to the left, the Chiku span, which is the closing price, is still under the candle. That's bearish. And you still have a bearish cloud. So we don't have all of the elements looking good here yet. And by the way, if things start to go bad for Google, and I'm not suggesting that they are, but this is looking more like a Head and Shoulders, the negative version of that, right? So the head, for example, would be over here. Here's the shoulder. And if price starts to drop, say next week, the week after, or whatever, then we'll be experiencing a traditional Head and Shoulders. And if that happens after that move up, that could be really, it's not going to be good. Let's just put it that way. So far, things are looking good. Let's look at the daily chart. Okay, it's still in an uptrend on the daily. So the daily looks bullish. Okay, and what about Tesla? Tesla was down 0.10% on the daily chart here. It's inside the cloud. It's under the moving averages. On the weekly chart, it's inside the cloud. So nothing to do with that one yet. And Apple is just broke into the cloud on Friday. I'm sorry, today, Thursday. So at the end of the week, it's closed in there. It's still not there yet. Chiku span is still under price. We get a bearish cloud over here. On the daily chart, it's starting to look more bullish. We've got that 200-day, though, waiting right there. It's got a lot of resistance it needs to get through, basically. So I wouldn't be touching that one either. And then finally, let's take a look at GRNY, which is one of the members' requests. And this is the Tom Lee ETF, which was introduced on November 7th. Back here is the initial candle, or the day that it was incepted. Okay, and so we're talking about, it's moved up approximately from that opening there, a little over 14% or so. So it didn't have a great start because it was going sideways for a bit there. You can see that in the beginning for like, I don't know, about 5 months or so, it was just stuck in a range, and then it had this big drop, right? And then now it's been taking off. And so it looks good on the daily chart. Here's the weekly. All right, so yeah, it looks like it's up a little bit over 13% or so. And guys, guess what? That's gonna do it for this video. Thanks for watching. If you guys like the software that I'm using, it's called TC2000, and you can get a $25 coupon with the affiliate link that's on my YouTube page. So if you're on my YouTube page here, okay, you want to click right here. It says 9 more links. Click on that, and this will happen. You'll get this little box. You can read about my channel, and then you can scroll down, and that's where you'll find the $25 coupon right here, that link. Here's my Twitter page if you want to check that out. My Patreon page, where I'll be doing some videos this weekend, and 1 or 2 videos for Patreon, just Patreon members only. And of course, I'll also be doing a members only video for YouTube. So that's a different situation. I'm trying to stay busy, even on the 4th of July. But if you want to get access to this software here, you click on the link. This page here will pop up. You enter your email in this box right here. You press the button here to download the Windows, if you have a Windows laptop. Or if you want to use it on a Mac, you can use the web-based version. There's also the mobile version for your cell phones. Pretty cool. The pricing is over here. You can find out about the software plans right there. I would recommend out of the 3 different tiers, the gold, because it has the ability, you have the ability to draw on the charts. That's really important. You have the ability to drill through sectors and industries. You can create alerts on your stocks. It's really easy to create an alert. How do you do it? Let me show you guys real quick how you would go about that. So you go to, say you're on here right now, and let's say hypothetically, or let's throw Tesla on for a moment. We'll look at Tesla, and let's say that I'm like, okay, I want to buy Tesla when it gets above the Ichimoku cloud. All right, now what I could do is click on the Ichimoku cloud, and then right here, it says set alert. Press that, okay? And over here, you can create a rule. That's the single span A right there. So what we're going to do is go to, instead of conversion, we're going to go price here. That's the price. And the condition is that it's greater than the single span A right there. So, or crossing up Ichimoku cloud. Okay. Now, so once I set that up, and I can set up even more things. Maybe I want the volume to be at a certain level. I could do that too. I could add things and create additional, options right there too. But then once you've got that down, so you got price crossing up Ichimoku cloud, hit OK. Alert created. When that happens, I'm going to get an alert. I'm going to know. Okay, it's very, very cool. Or you can also just draw a trend line. Maybe you just want to make it simple. Maybe you want it to be the top of that cloud right there. So you want it to be at a 385.95 level. So you right click, you hit the set alert. Okay, Tesla crosses the line. You can even restart the alert after, if it does it, the next day, or up to an hour or 15 minutes later, or whatever. Even down to a 1 minute chart if you're day trading, which is great. You can monitor that trend line for up to 2 years if you wanted to. It's up to you to determine that. And if you want to put in a note in here about what it is, maybe a note about your trade, okay, what you're trying to do or accomplish, so you don't forget about it. You can put that there and then hit the OK button, and that will set up the alert. Really cool stuff. Anyway, that's all, folks. Hope you all have a great 4th of July. Look out for those videos later this weekend, and I will catch you all in the next video.